Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 6th, 2024, and we're diving into the first quarter fiscal 2025 earnings report of Performance Food Group, a leading food and food service distribution company in North America. Joining us is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to discuss Performance Food Group's latest earnings report. The company has shown some interesting dynamics this quarter, and I'm excited to delve into the details.
Revenue and profitability overview. Let's start with the top line. Performance Food Group reported net sales of $15.4 billion for the first quarter of fiscal 2025, a 3.2% increase from the previous year. John, what are the key drivers behind this growth?
The growth in net sales was primarily driven by recent acquisitions and an increase in case volume, particularly in the independent food service sector. The company also benefited from a favorable shift in the mix of cases sold and an increase in selling prices due to inflation.
Despite the increase in sales, net income decreased by 10.5% to $108 million. What factors contributed to this decline?
The decline in net income was mainly due to higher operating expenses, which rose by 7.1%, and increased interest expenses. These were partially offset by the growth in gross profit, which improved by 6.1% to $1.8 billion.
Operational efficiencies and future outlook. Performance Food Group's adjusted EBITDA rose by 7.3% to $411.9 million. How did the company achieve this improvement?
The increase in adjusted EBITDA was largely due to the company's focus on procurement efficiencies and a favorable shift in the mix of cases sold. Additionally, the integration of recent acquisitions like Cheney Brothers and Jose Santiago has started to contribute positively to their financial performance.
Looking at cash flow, the company reported operating cash flow of $53.5 million, but free cash flow was negative at $43 million. What are the implications of this?
The negative free cash flow is primarily due to increased capital expenditures, which rose to $96.5 million. This reflects the company's investment in growth and infrastructure, which could pay off in the long term, but it does put some pressure on their current cash position.
Segment performance and strategic initiatives. Let's break down the performance by segments. How did the food service, Vistar, and convenience segments perform this quarter?
The food service segment saw a 5.7% increase in net sales to $7.7 billion, driven by acquisitions and case volume growth. Vistar's sales increased by 2.8% to $1.3 billion, although its adjusted EBITDA decreased due to higher operating expenses. The convenience segment had a modest sales increase of 0.4% to $6.4 billion, with a notable 11.2% rise in adjusted EBITDA.
The company also repurchased $29.5 million worth of shares. What does this indicate about their financial strategy?
This share repurchase reflects the company's confidence in its long-term growth prospects and its commitment to returning value to shareholders. It also suggests that the management believes the stock is undervalued at current levels.
Risks and challenges. John, what are some of the risks and challenges that Performance Food Group faces moving forward?
One of the main challenges is the increase in operating expenses, which could continue to pressure margins if not managed effectively. Additionally, the company has a significant amount of debt, with long-term debt standing at $3.9 billion, which could be a concern if interest rates rise further.
How should investors view these risks in the context of the company's overall performance?
While these risks are notable, the company's strategic acquisitions and operational efficiencies provide a solid foundation for future growth. Investors should weigh these factors against the potential for continued revenue and EBITDA growth.
Key takeaways. In summary, Performance Food Group has delivered a mixed performance this quarter, with strong sales growth and adjusted EBITDA improvements, but challenges remain with net income and cash flow. John, any final thoughts on their investment prospects?
Overall, Performance Food Group is well positioned for future growth, thanks to its strategic acquisitions and focus on operational efficiencies. While there are some short-term challenges, the long-term outlook remains positive, especially with their continued expansion in the food service sector.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Performance Food Group's performance in the comments below. Until next time.